I think the only bullish thing that we have going on for us right now is how bearish the attitude has gotten towards the U.S. markets. And maybe that's enough for a near-term bounce back. Maybe that's why we're seeing those futures pop up here, but it's not enough for a sustained rally. The issue that I have with the market right now as we go into the earnings season is that all the headwinds that we had last quarter, such as low oil prices and high dollar, and by the way, uncertain China, all of those things have only gotten more uncertain, right? Look at oil today, for example. So to me, those things, until those things start to stabilize, oil and the dollar starts to stabilize, it's going to be very difficult to see a sustained leg higher here in the market. So selective is right, patient is the other word. I think the playbook is going to be very different in the first half of the year from the second half of the year.
Although what you just described, you could be near levels in all those things, and I would throw in addition to oil and the dollar, throw in China.
Right.
But you might be at levels where they could all be expected to be bottoming. I mean, 30 at oil, you would think you're close to. I mean, people thought 70 was the bottom, 60, 50, 40, 30. Zero is definitely the bottom, right? So you only got 30 left, and then maybe even the dollar, and maybe China, which was under 3,000 again, right? That's where it went last time that you hit the big. So all these things could just bounce a little, and that might give support.
That's right. But again, I think it's a matter of time. And I would argue that in the near term, there's nothing supporting oil prices. I think the seeds for eventual price recovery are being sown right now. But in the near term, and I'm talking about the next month, maybe 3 months, you've got Iran that we have to get through and the lift off of sanctions there. You have maybe another rate hike that would lift up the dollar and push down the price of oil. So there's just nothing good going on in the oil markets right now until it becomes evident that the U.S. shale oil production is actually declining. And by the way, it is. And that decline is only going to accelerate throughout the rest of the year. So yes, Joe, you're right. Eventually, that does support oil prices.
Within the year, all of these things should bottom. So then by the end of the year, the end of the year, we're in a sustained uptrend.
I think we are in an uptrend. I'm not a believer that this bull market is over yet. I don't think that's the case. The Fed is not tightened enough. It has not knocked down the U.S. consumer just yet. So I don't think this is over. But my playbook for the first half of the year versus the second half of the year would be quite different. I think the first half of the year, yes, you do buy the pullbacks, but you also look at the U.S. dollar strength to continue. So with that, you want to own new economy stocks. You want to own beneficiaries of lower gasoline prices. You want to own consumer stocks. But once oil bottoms, I think we can expect that towards the second half of the year. And once the U.S. dollar stabilizes, I think you can look at emerging markets. I think you can look at large cap oils.
So, Sorgen, do you remember or Becky, in the financial crisis, on the way down, we were at high levels in the equity markets, right? And we went way down, like 660, 600. Do you remember any major Wall Street firms saying sell everything? Did any of them get out in front of that this early, 10% down? I don't think any of them did, which is a good, that's what I mean.
I remember it, but
there were some people in mid-September after Lehman went under.
After Lehman, though. See, now,
but by the way, that was not a bad call.
Right.
The problem is you have to be right twice. You have to say get out of the market, and then you have to know back in maybe.
But we've had 3 or 4 major firms say this is a bear market, get out. So far.
Although I don't know who at those firms, like JP Morgan guy was a Croatian equity analyst.
And RBS.
I think certain people have said that, and certain people will say it this year, and we will say it eventually. I think what this year and last year, frankly, has been is a reminder that we're not in the early stages, or maybe not even the mid stages of the business cycle.